So in the previous class, we were discussing about the chapter salary, and we have completed the first part to the salary, and in the second part to the salary, we have completed which is retirement benefits. We completed till till PF alone is pending, which will be done today. That is the agenda of this class. We'll solve questions in relation to the previous class, and we'll take up the concept of PF, complete the concept of PF, and solve certain questions in that regard. Before that, let us just revise what has been done in the previous class. Who is willing to take an initiative to revise of the three? Yes, Reshma, Shripriya, Sudarshan. யார் ரிவைஸ் பண்றீங்க? இல்ல நான் ஒருத்தரை பிக் பண்ணணுமா? Yes, Reshma.
Yes, sir.
Can you revise it from section 15 till what has been done till yesterday?
Yes, sir. So provisions மட்டுமா இல்ல like complete
Complete.
Yes, sir. Okay. So we started off with income from salary. So income from salary is covered from section 15 to 17. So section 15 is the charging section. So in that section A deals about the salary which is due from the employer or the former employer. So during the previous year, whether it is paid or not. In section 15B talks about the salary received from the employer or from the former employer, which is not due to him. So like for example, they are talking about the advance salary. So April month salary received in the month of March, so like that. Then section 15C talks about arrears of salary. Okay, which is say arrears of salary வந்து if it is taxable on payment basis, if it is not taxed on due basis in the earlier years. Then we talked about some conditions for an income to be charged under the heads of salary. So one of them is the there must be an employer-employee relationship if that income is taxable under the head salary. Then we talked about the concept of advance salary and advance against salary. Wherein we mentioned that advance salary will be taxable and advance against salary is not taxable because it will be considered as treated as a loan which is received from the employer. Then if there's any revision of salary, unless otherwise mentioned, it will be treated as it will be given effect retrospectively. Then we saw the meaning of the term salary. Salary includes wages, annuity or pension, gratuity, any fee, commission, perks in lieu or of in addition of any salary or wages. Then advance of salary and payment received by an employee in respect of any period of leave not availed by him. Then we talked about few issues. First issue was that whether the payment made by Swiggy and Zomato to its delivery partners, will it be taxable under the head salary? So the answer is no, because there's no employer-employee relationship. So the delivery partners are just known as the gig workers. So they are not under direct employment of these Swiggy and Zomato. So hence there's no employer-employee relationship, and it will not be taxable under the head salary. Then we talked about the case of Dunzo, where they delayed salary payments with salary payments. In that case, yeah, I don't know how to put it. So they say the salary payment is delayed. So, but however, it has actually the salary has been due to them. So it will be taxable on due basis. So subsequent, if a salary subsequently it's not paid to employees, then whether can it be claimed as deduction? So that's what we saw in the CIT and Bachubai Shah case of the Gujarat High Court. The Gujarat High Court.
Yeah.
Rule. Then
just a minute. Sorry to interrupt. as far as this Bachubai is concerned, right? So in that Bachubai, this will not be the final decision. So what they would have said is, you would have read it somewhere in the news that the judges have expressed this. அந்த மாதிரி நம்ம பார்ப்போம் இல்லையா? அந்த மாதிரி பச்சுபாயில கேஸ் வந்து it was in relation to something else. So basically கேஸ் எப்படி இருக்கும்னா பச்சுபாயில he would have himself voluntarily said I am not going to receive this payment. So அதை வந்து discuss பண்றச்சு as a line they would have given this. So this is not a final decision. I cannot say that this is what has been held in Bachubai. This has been discussed in Bachubai is the perfect terminology. That alone just be informed, right?
Yes, sorry, sir.
Yeah. I have not said it on the other day's class. So I thought maybe I'll just clarify it.
Yes, sir.
You
I'll
can
correct.
continue. Yeah.
So next issue is that whether salary made to the partnership firm, whether salary to the partners from the partnership firm can be taxed under the head salary. The answer is no, because in this case, partnership firm and partners are unlike the companies and the shareholders. They are treated as the one and the same. So there is no existence of employer-employee relationship. So hence, it will not be taxable under the head salaries. Then sorry, sir. Yeah. So next we saw about the salary foregone for a PM CATS fund. Will it be taxable in the hands of employee? So they just said that this is for towards the specific fund. So if the amount is applied for that specific fund, then it will be taxable. Then we talk about whether the payment made to the directors of a company, whether it is taxable or not. It is dependent on the type of director. So if the director is, if the director is like the independent director or the non-executive director, then he will not be an employee of the company. So it will not be taxable under the head income from salary, as there is no employer-employee relationship. In other cases, if he is an employee of the company, then it will be of the nature of employer-employee relationship, and hence the salary received by a director will be taxable under the head salary. Then whether pension received by the government employee, it is taxable under the head salary. And would it be different if it is a case of family pension? So in case of pension received by the employee, so here it is whether whether the employer-employer irrespective of whether the employer-employee relationship or not, it is taxable. So hello, sir, am I making a mistake, sir?
No. What is the problem?
No, sir, because I just thought I was making a mistake.
No. What did you say? Could you please come again?
So in case of pension,
Yeah.
yeah, then in case of pension, the the amount received by the government employee, it is taxable because the definition not only covers the current employee, it also covers the former employee salary, which is received from the former employee, is also taxable under 15A. So
Yeah.
here in this case, the pension is received when an employee retires or he quits the existing job. So in that case, in this case, the pension is received from the former employee, so hence it is under the ambit of salary. It's covered under the definition of salary, hence it is taxable. Then in case of family pension, it's like if this what do you call it? The person would have either died or there must be some incapabilities to him. So there's no the pension is not received directly by the person, but either by his family members or his legal heads. So there's no direct employer-employee relationship involved in this. So it will not be taxable under the head salary. Instead, it will be taxable under income from other sources. Then we covered the three. Main parts under which the chapter is divided. First one is allowances, and second one return benefits, and the third one is perquisites. So first one dealt with allowances. So allowances we saw three categories. Before that we talked about the thing that allowances will be taxable either on due or receipt basis, depending on the what allowance it is. So there are three categories of allowances: fully taxable, partly taxable, and fully exempt allowances. So under partly taxable, first we talk about partly taxable allowances, where we covered HRA and special allowances. So for HRA is covered under section 1013A. So the provisions relating to HRA are as follows. It's like the first one is actual HRA received. Second one is rent paid minus 10% of salary for the relevant period. And third condition is 40% of the salary for the relevant period. If the person is residing in a metro city, then it will be 50%. So in this for the purpose of HRA, metro cities include Delhi, Mumbai, Kolkata, and Chennai. And the definition of salary for HRA is basic plus DA forming plus commission based on a fixed percentage of turnover achieved by the employee. Then the allowances, we saw two conditions. First is that the assessee must be living in a rented house. If he is living in his own house but he is receiving HRA, then it is taxable. He cannot claim any exemptions. Then the relevant period means the period during which he is staying in the rented house during that particular previous year. Then then we talked about special allowances, which is covered under 1014(1). Or every special allowance will be exempt to the amount it is utilized for that purpose for which it has been given. So for example we talked about traveling allowance, uniform allowance, research allowance, conveyance allowance, etc. Then we then under section 1014(2), we talked about the most important allowances among the others. So first one is the children education allowance, so which gives the following amount as the exemption to the employee, which is rupees 100 per month per child, but it can be claimed up to two children. So children education allowance is rupees 100 per month per child, which can be claimed up to two children. Next one is hotel allowance, hostel expenditure, sorry sir, hostel allowance. So for that, the limit is rupees 300. So instead of 100 in the case of children allowance, for hostel they can claim up to 300 per month per child. Same thing as with respect to two children. So maximum limit is on two children. Next, the transport allowance is to facilitate disabled or an employee who is blind, deaf, or dumb, or if he is handicapped. So for him, the limit allowed is rupees 300 per month. Then we moved on to retirement benefits. So first we saw pension. Then pension, there are two types of pension: commuted pension and uncommuted pension. Commuted pension okay. So pension commuted and uncommuted pension. Commuted pension it is fully taxable. It's fully taxable irrespective of whether he is a government employee or not. Uncommuted pension if he is a government employee, then it is fully exempt. If he is a non-government employee, again we must check for two conditions: whether the employee is receiving gratuity or not. So first, if the employee is receiving gratuity, then the amount exempt is 1/3 of commuted pension divided by the percentage of commutation. If he is a non-government employee but he is not receiving gratuity, then the amount of exemption will be half of commuted pension divided by the percentage of commutation. Next, we talked about
Just a minute. You just interchange the terms between commuted and uncommuted. So uncommuted pension is fully taxable. Commuted pension is what you gave the explanation of, whether he is a government employee or non-government employee.
Oh, sorry, sir. I think I messed up.
Not an issue, not an issue. The provisions are correct, but you just interchanged.
Yes, sir. Sorry, sir. My
Yeah,
mistake.
not an issue. Continue.
Yes, sir. So then we saw section 1010, which deals with gratuity. So gratuity, again, it is divided into two parts. The first one, whether if gratuity is received during the service, what will happen? If it is received at the time of retirement or death, what will happen? So gratuity, if it is received during the service, then irrespective of whether he is a government employee or not, the entire amount of gratuity which is received during the year of service will be taxable for all the employees. Then if the gratuity is received at the time of death or retirement, if he is a government employee, as usual, it is fully exempt for them. So If he's not a government employee, again there are two conditions. So first we have to check whether he is covered by POGA. So if he is covered by POGA, then least of the following amounts will be exempt for the purpose of calculation of the salary. First one is that actual gratuity received. Second one is 20 lakhs. Third one is 15 by 26 into the last drawn salary into completed years of service or part thereof. Then, if he is not covered by POGA, then least of the following amounts will be exempt. So, first one is actual gratuity received, second is 20 lakhs, and third one is half of the average salary of 10 months preceding the month of retirement and into years of completed service. Here, you cannot take the part thereof, it's just the whole year. Whereas if it is covered by covered in a POGA, even if it is even the part is like if it is like 29 years and 9 months, he can claim it as 30 years. Whereas that rounding off cannot be done in the case of in the case when he is not covered under POGA. Then we saw some few points with respect to gratuity. We talked about whether the completed years of service also include this past employment, this previous employment, the service covered under the previous employment. The answer is yes. Then we talked about the second condition for for the gratuity exemption, which is 20 lakhs. For them, they are saying this 20 lakhs is the lifetime exemption which is available to the employer. So and under the like if the employee has received any gratuity exemption earlier, like for example, like all he has already received a gratuity exemption to the extent of rupees 13 lakhs, then the next time when he's claiming for the exemption, he can only claim for rupees 7 lakhs. He cannot claim for 20 lakhs as the second condition. So the 20 lakhs exemption is only a lifetime exemption available for him towards gratuity. Then for the purpose of gratuity, the salary means again here it differs with okay, for the first one, if it is covered under POGA, then the salary will be basic plus DA. If it is not covered under POGA, not covered by POGA, it will be basic plus DA plus commission based on 50% of turnover, so similar to HRA. Next we talk about leave salary. So leave salary, it's covered by section 1010A. So again, we saw two things. So first, the leave salary is received during the service, then it is fully taxable irrespective of whether the employee is a government employee or not. If the leave salary is received during the retirement, then we have to classify them into government or non-government employee. If he is a government employee, it's fully exempt. If he is a non-government employee, the least of the following four amounts will be exempt. So first one is the leave salary which he actually receives. Then the second one is rupees 3 lakhs. Third one is the 10 months average salary. Then fourth one is that the leave due. So leave due is basically the whatever leave has been allowed to him minus how much he has availed during that particular service of employment. So for example, total leave allowed to him is 240 days of leave, but he has claimed only 120 days of leave. Like he has made himself absent for 120 days. Then the remaining 120 days is a leave due for him. So, sorry. So
Correct.
leave, yes, sir. So leave due into like 10 months average salary again. So here the leave due, they are imposing a condition that the leave due should not exceed 30 days per annum. So then we saw about retrenchment compensation. So retrenchment compensation, they are imposing four limits, and the least of the four limits will be available as exemption to them. So adula first வந்து they saw first it says 15 days average salary into completed years of service or part thereof. Next limit is rupees 5 lakhs. Third one, again they are classifying it into three things. If they are so if they are receiving this Sir, 1 minute, sir. I just got confused. Is it that the salary or the things, the salary, if they are received on a monthly or daily basis, then those things, no, sir.
Yeah. So if at all they are paid monthly, you should take the average of 3 calendar months. If they are
Yes.
paid weekly, you should take 4 calendar weeks. If they are paid daily, you should take 12 working. Last 12 working days, last 4 calendar weeks, last 3 calendar months.
Yes, sir. Thank you, sir. And then for the purpose of retrenchment compensation, salary means all component like every component of salary is included other than bonus and gratuity and the contribution to pension schemes. Then we talked about voluntary retirement receipts. Here again, the least of the following will be exempt. So first one, higher of the two amounts. What are the two amounts? The three 3 months last drawn salary into completed years of service. Then the second amount is the last drawn salary into the remaining months of service. Okay, this is the second limit is 5 lakh, and third one is actual compensation received. The least of the following will be exempt from tax. And we saw a few conditions with respect to voluntary retirement receipts. The first condition is that the employee should have completed 10 years of service, or in terms of age, he must have completed 40 years of age. Then it is not applicable to directors. Then then the VRS vacancy it should not be filled up. If we then Sir,
Okay. Yes.
yes, sir.
So VRS is also done. So you just completed the conditions also, right?
Yes, sir.
Super fantastic.
Thank you, sir.
Super very good job. Naya Sudarshan கையில அந்த மாட்டியா?
எக்ஸலன்ட். இவ்வளவு பெருசாலாம் என்னால வச்சுன்னு சொல்றதெல்லாம் கொஞ்சம் கஷ்டம் தான்.
Very good. Right. Very good, Reshma. Good work.
Thank you, sir.
So what we'll now do is, as far as question number 7 is concerned, we'll just keep that on hold because I just heard from students that you require some more time to complete that question. So I'm just keeping that on hold now. But as far as the other things are concerned, let us just move on. We'll just take up a question on leave salary now. So we'll just take up a question on leave salary now, and then we'll just continue. Yeah, Sudarshan, taknu padi pakalam question.
Mr. Gupta retired on 1/12/2022 after 20 years of service, received a leave salary of 5 lakhs. Other details of his salary income are basic salary 5,000 per month. 1,000 was increased with effective from 1/4/2022. DNS allowances 3,000 per month, 60% of which is for retirement benefits. Commission 500 per month, bonus 1,000 per month. Leave availed during service 480 days. He was entitled to 30 days leave every year. You are required to compute his taxable leave salary, assuming if he is a government employee and if he is a non-government employee.
Takkan solve area 5 minutes la. So for non-government employee, it is fully exempt. Leave salary which is received at the time of his retirement is fully exempt if he is a non-government employee. So in first case, the amount is nil without any computation. So it will be like the computation will go this way. Leave salary received. This is leave salary received 5 lakhs less amount exempt, which is also 5 lakhs. So taxable leave salary would be